Bitcoin is trading around $64,000, but behind the scenes, some traders are positioning for a much bigger move. Massive Bitcoin options trades with roughly $2.5 billion in notional value are targeting the $70,000 to $72,000 range by the end of July. And the timing is particularly interesting because the Federal Reserve is scheduled to make its next interest rate decision just 2 days earlier. So, is Bitcoin preparing for a breakout? Or could $65,000 become another rejection point? Let's break down the data, the institutional flows, and the key levels every Bitcoin investor should be watching. Let's start with Bitcoin's price. Bitcoin is currently trading in the mid-$64,000 range after recently pushing above $65,000. The important thing here isn't just the current price, it's the battle happening around this zone. Bitcoin has shown renewed strength after recovering from lower levels, but the $65,000 region remains an important area for traders. A convincing breakout would require more than a brief move above resistance. Traders will be watching whether Bitcoin can hold higher levels with strong volume and continued buying pressure. On the downside, a move back toward the lower end of the recent trading range could indicate that buyers are losing momentum. Right now, Bitcoin is essentially at a decision point. So, what's driving Bitcoin? One important factor has been the changing macroeconomic environment in the United States. Recent inflation data came in cooler than expected, reducing concerns that the Federal Reserve might need to move toward tighter monetary policy. That's important for Bitcoin because expectations around interest rates can have a major impact on risk assets. When investors expect tighter monetary conditions, speculative assets can come under pressure. But when markets see a potentially more supportive environment for liquidity, risk appetite can improve. Bitcoin benefited from this shift in sentiment, helping the cryptocurrency push back above $64,000. But now, attention is turning toward the next major event, the Federal Reserve's July meeting. This is where the story gets particularly interesting. According to reporting from CoinDesk, large Bitcoin options trades representing roughly $2.5 billion in notional value have been structured around a potential move towards $70,000 to $72,000 by the end of July. But let's be very clear about what this means. This does not mean Bitcoin is guaranteed to reach $72,000. Options positioning reflects how traders are structuring their exposure to potential future price movements. It can tell us where sophisticated market participants see opportunity, but it cannot predict the future. Still, the size and timing of these trades make them worth watching. The expiration comes around the end of July, while the Federal Reserve's interest rate decision is scheduled shortly before that. That creates an interesting combination. A major macroeconomic catalyst occurring close to a significant options expiration. If volatility increases around the Fed meeting, Bitcoin could see a meaningful move in either direction. So why does the Federal Reserve matter so much? Bitcoin trades 24 hours a day and operates independently from central banks, but that doesn't mean it's isolated from global financial conditions. Interest rate expectations influence the dollar, bond yields, liquidity conditions, and investor appetite for risk. If the Federal Reserve delivers a message that markets interpret as supportive for risk assets, Bitcoin could benefit from renewed buying pressure. On the other hand, if policymakers signal greater concern about inflation or suggest monetary policy could remain restrictive for longer, risk assets could face renewed volatility. The key isn't simply whether the Fed changes interest rates. Markets will also analyze the language used by policymakers and any signals about the future path of monetary policy. That's why the days surrounding the Fed decision could be particularly important for Bitcoin traders. Another major piece of the Bitcoin puzzle is institutional demand. Spot Bitcoin ETFs have created a major channel for traditional investors to gain exposure to Bitcoin, but recent flows have been volatile. After a significant outflow of approximately $425 million, U.S. spot Bitcoin ETFs subsequently recorded roughly $181 million in inflows, according to recent reporting. This shows why investors shouldn't look at a single day of ETF data and immediately assume the market has changed direction. What matters more is the trend. If sustained ETF inflows return while Bitcoin breaks above resistance, that combination could strengthen the bullish argument. But continued outflows could create additional selling pressure. Institutional flows are therefore one of the key indicators worth monitoring alongside Bitcoin's price. Let's look at the bullish scenario first. If Bitcoin can break through the $65,000 area and maintain momentum, traders may begin focusing on higher levels. Continued institutional demand, positive ETF flows, and a supportive macroeconomic backdrop could all help strengthen that move. Under this scenario, the $70,000 psychological level would naturally become an important area to watch. Beyond that sits the $72,000 level highlighted by recent options positioning. Again, $72,000 should not be treated as a prediction. It's simply a market level worth monitoring based on current positioning. The strongest bullish signal would be a combination of price breakout, strong trading volume, and continued demand. Now let's consider the other side. If Bitcoin fails to hold its current range and sellers regain control, the bullish breakout scenario could quickly weaken. A rejection around $65,000 would put attention back on lower support areas. Traders should watch whether buying demand appears during pullbacks or whether selling volume begins to accelerate. Negative ETF flows, tighter financial conditions, or an unexpected shift in Federal Reserve expectations could also pressure Bitcoin. That's why risk management remains important, especially around major economic events. So here's the bottom line. Bitcoin is entering an important period, with price action near a key technical zone, major options positioning targeting higher levels, and a Federal Reserve decision approaching. $72,000 is possible, but it's far from guaranteed. Watch the $65,000 area, ETF flows, trading volume, and the Federal Reserve. These could help determine Bitcoin's next major move. If you want daily analysis of Bitcoin, crypto, stocks, gold, and global markets, subscribe to MarketPulse 360 and turn on notifications. Stay informed. Stay ahead of the markets. This content is for educational and informational purposes only and is not financial advice.